We are in the midst of a great financial crisis in our markets. The crisis transcends the cratering employment numbers and the contracting credit markets and touches on fundamental confidence. Confidence in our economy, our financial institutions, and our regulators. The early warning signs started with the Bear Stearns hedge fund in 2007. Few would have guessed then that less than a year later that firm would disappear as part of a weekend agreement hashed out between the Federal Reserve and J.P. Morgan Chase. And after that, it only got worse. All of those losses undercut our sense of financial security. Investors feel it, and the volatility of the markets show it. Many of our present challenges can be traced to bad mortgage lending and underwriting, securitization that occurred with little due diligence, and the inability of our financial institutions to manage their risk. These business lapses were amplified by extraordinary leverage. Some of the investment banks were leveraged as high as 34-1. Leverage at the Bear Stearns hedge funds was reported to go as high as 60-1 in some deals. And as Forbes pointed out in an article, in rocky times, this kind of leverage can sink the ship in no time at all. In fact, that is what appears to have happened. We also know that complexity in the markets contributed to the problem. The ingenuity of financial engineering in an environment of low interest rates and high leverage outstripped the ability of our markets and our regulators, particularly when the housing bubble burst. These failures have made one thing clear. The markets that once were a source of security for investors and for the American economy have now become a source of anxiety. While we can point to many problems, we must acknowledge the important role that private pools of capital, such as hedge funds, have played. When others had no capital for funding, it was hedge funds that were providing liquidity in certain markets. It is also clear that many hedge fund managers have been adept at identifying market trends early and accurately. As we discuss the need for more oversight of hedge funds and talk about the problems in the economy, it is with the awareness of the contributions these funds have made to robust capital markets and capital formation and their continuing role in these very important tasks.